review of the FTSE 100 from an intermarket analysis perspective, and it's still the 2014, 29th of December, and just a few days left before we welcome the new year. Okay, right, so where are we? We've had quite a stellar rally to start off with. It's been quite phenomenal, given the light volume nature, even though we've got concerns with regards to Greece now. Russian ruble obviously collapsing, concerns there. The commodities crash, which obviously sent the stock markets reeling. Again, we've totally ignored that. Added the fact that we've had geopolitical concerns, obviously Russia-Ukraine situation, the North Korean situation with regards to the Sony debacle, obviously the movie interview. I mean, you can go on and on, the amount of concerns that we've had in this market. Certain banks in Russia now are on the verge of being bailed out, if not bailed out already. Global growth concerns forefront just over the weekend. Chinese data was printed at 3.5% of GDP as opposed to 7%, 7.5%, and then the figures were automatically wiped off the website. So I think you can try and research the story there as well. We've had Russian GDP contracting as well. We've had Mr. Weidman over the weekend talking about anti-QE comments, stating that the growth in Germany is more than satisfactory, therefore there's no need for QE, and talking against buying sovereign or government bonds. So the level of and also economic data today out of the US wasn't exactly spectacular. It came in 50% below expectations. So overall, the concerns are overwhelming in terms of fundamentals. We've got the Grexit concerns as well. We've got Greece failing its third vote, and now we're going to snap elections, and obviously the Syriza and Samaras party are battling out, okay, for supremacy, and everybody knows that the Syriza party certainly has an upper hand, and obviously they're anti-austerity, and therefore that doesn't bode well for the Eurozone, especially when we've got talk about QE. So the uncertainty level is so high, and yet the stock markets continue to every single day just grind higher, grind higher, grind higher. Okay, and that's all based on light volume. That's all it is, light volume manipulation, and that's basically what it is. As soon as the volume increases, this market is going to nosedive. Okay, so that's basically the summation of the fundamentals. And with regards to the FTSE, one important point, given the fact that we've just made a new low on oil, we've just hit $53. Okay. And so that doesn't bode well for the FTSE 100. Obviously, we've had gold nosediving as well from 1200 to 1180 as well. Okay, so that's under pressure. So we've had the Nikkei down overnight as well. I mean, you can look at the Nikkei. The MySec surprisingly was positive today, which is quite surprising. But one of the main variables today is that the Greece Athens composite index basically is down by almost 4%. Okay, so that's negative. And then we had the Nikkei that was down also again by 0.5%. Okay, so that's a negative. Okay, so these are all negative factors. All negative factors. I mean, the Dow itself today was down, surprisingly. Wow, the Dow is negative. So it's these are all signs and are indicating for further downside. Okay, so that's my argument here. So why is the FTSE itself into resistance? Okay, so this is a chart of the FTSE 100 on a daily chart. Okay, we've got previous support equal resistance. So resistance levels to watch out for are 6640. Okay, and if that obviously breaks away, then you've got 6655. If that breaks away, then obviously you've got the 200 MA at 6680, which very unlikely I expect to hold. So should I say surpass? So I mean, very unlikely for 6640 to break intraday. That is okay. What they do after hours, I mean, I've been getting stopped out left, right, city this week or last week after hours because of the light volume and the skittish markets, etc. And obviously it's all about stop loss party, so they're all trying to attempt to aim for your stop losses. So it's a shame, but that's basically the market. You don't change your trading style. You keep your trading style in there. You keep your risk, obviously, reward concept in there as well. And you keep trading. It's just all numbers. Okay, if you keep trading and you're continuously buying with an 89% success rate, inevitably you're going to succeed, even regardless of what the market does in the short term. Okay, that shouldn't really unfaze you. Okay, so that's the FTSE 100. Previous support equals resistance. FTSE 350 again, we're into 200 MA resistance. That's a solid resistance zone. Also, previous support equals resistance as well. Okay, so watch out for the FTSE 350 being into resistance. FTSE 250 obviously has confirmed resistance or weakness already with a bearish engulfing candle, and that's exactly at resistance. So they all three are lining into resistance. Now we've got the volatility index. Volatility index is now potentially coming into support. I mean, you can see this more clearly on the 60-minute chart. Obviously, we've stopped making lower lows and lower highs. We're potentially making a higher low here now, and then obviously looking to potentially reverse and make a higher high. So we'll certainly watch out for that, and that'll be interesting to see what happens with regards to price action from the outset. Okay. Now that we've covered that index, now we can also look at the Dow, and this is quite interesting. 60-minute obviously is showing exhaustion, and the daily chart certainly is showing exhaustion given the fact that you've got doji candles. Okay, we look at Dow Transportation Index 60-minute. As you can see, we've broken out this bullish channel, and the 10-minute chart really is showing an intraday double top. That's what we're looking at there, and the daily chart, as you know, we are at horizontal resistance. So all those factors there are showing me that the FTSE itself wants to fall because the Dow Transports and the Dow Jones are both showing signs of weakness. Okay. Now the only other factor that we have to consider now is the S&P 500, and that certainly is making a new high, and certainly is propelling higher, even with oil prices making a new low, which is quite confusing and quite concerning, really. And the only thing that you can attribute that to really is if it was any other environment, then I would consider that to be bullish. But because it's a light volume environment right now, it's confirmation of a fake out. That's basically how I interpret it. The fact that we continue to make new highs in the last few days with no volume whatsoever and bearish fundamentals, it's basically a classical suck everybody in type price action, and then obviously we will spit them out eventually. So watch out for this. I mean, you've got this horizontal resistance that has held intraday at 2093. So again, watch out for that and looking for this break here of this wedge. Okay, on the downside, and you've got a potential gap fill here at 2081. So watch out for 2081 for support, and that's going to be very interesting going forward. Okay, so my main obviously emphasis is on the FTSE 100. So if I bring up my chart, the FTSE itself, and give you more of an insight here. So a 10-minute chart is a horizontal resistance, as you can see here at 66.31, which corresponds to the daily chart as well, so watch out for that. We did have quite a substantial sell-off intraday, but the market seems to have crawled it all back, and that was when the US session kicked in. So I mean, that's playing catch up to the US markets, but not that substantially, which was quite surprising for me as well. I was stopped out, although I have taken a little trade on the FTSE, and we'll see exactly how that transpires. Now I have this this key trend line here. We obviously failed to hold this resistance here, given the fact that we put in a potential lower high, and then look to go back to the 6590 region, and we failed to do that. Even with the Grexit phase, I mean, we've got Greece now on fading its third vote, and now obviously going for the potential snap elections where Syriza certainly holds the upper hand. That's the last situation or scenario that they want you to be in. Okay. For their own market, and obviously for European markets too. As you can see, this gap has filled, so there's a gap that was on left at 6660. I mean, what a rally, what a monster rally, folks. I mean, we've had 100 up to 66. I mean, this is ridiculous. On what? We've had oil prices continues to fall, therefore there was no catalyst for that. Okay, we've had concerns with regards to Russia, Ukraine escalating, and we're not escalating, but still present. And then obviously the Russian economy on the verge of faltering and breaking down. So again, not good news. And we've had Chinese data, obviously in China itself, slowing growth, etc. Situation there certainly is it remains. We've had Ebola still remaining in the background. Nobody really cares. So I mean, you can call it a Santa rally, you call it a manipulation rally, call it what you want, but this is one hell of a rally. And really, I mean, all the fears that were present and that caused the markets to fall are still there. I mean, oil's actually made a new low at 53, so that was the main concern for FTSE 100 to fall, and yet this market continues to defy gravity. Interesting. Okay, so very hard for anyone to actually maintain or remain bullish, really, with regards to all the fundamental concerns that we have. But yet the markets continue to go higher, and it's price action that ultimately pays. It is hard for a trader when you have this constant higher highs and higher lows. And even once we break out of this bullish flag, yet the market still wants to continue and propel higher, as you can see here from 6590 to 6630, 6640. So phenomenal price action. It's all light volume, and it just generally tends to flow up, especially when the Yanks come on board. It's amazing, absolutely amazing. But that is what it is, okay. And we have to deal with it, okay. And we have to trade accordingly. If it means our stop losses are hit, so be it, okay. So be it. Especially after hours, that's the most annoying thing, is when they really do float the markets up and knock out your stocks, given the wide margins and spreads, etc., that they have. But that's, again, like I said, I'm not complaining, because that's part of the market, that's part of the process. That's why we have our stops in place, and they're there to protect us. And even if it means you have a negative week or a negative day, it's irrelevant. It's all part of trading, folks. You put your stop losses in. If your stop losses hit, focus on your next trade. Reassess the situation, reassess the scenario. Or if the background remains the same, bearish fundamentals, technicals remain the same, you can see resistance, then reshort the market and put a stop loss in again. That's all it basically comes down to. So risk on, risk off, wax on, wax off. And as you know, my summation here is the markets are going to fall, do a fall. Whether that happens this year or next year, we're definitely looking to reverse and move lower. Okay, so goodbye.